let's talk about the markets. And this last week I wasn't trading, but and in many ways I'm glad I wasn't trading. It was an extremely low volume week. You can see the last couple of days, Friday was about 0.9 million contracts traded, and we had even less on the Thursday. It was kind of a shortened week because we had the Labor Day on Monday, and then Friday was kind of light as well because of the Rosh Hashanah kind of holiday. So that was one of the reasons why a lot of traders weren't at their desks. And so the most important feature this week was that we had a low volume up bar, and we're coming into some cyclical kind of turning points, but I think the market's still going to push on just for another day or two. And let me just show you what I'm seeing on my chart. So first of all, the volume chart's just showing extremely light volume at this point in time. On the turning points, we're due for some kind of cyclical top on the daily time frame. Here's better sine wave signaling that we're due for some cyclical topping out kind of pattern. You can see that we're starting to find a little bit of resistance here. However, I think we're actually going to push forward for a day or two more. When I look at some other time frames, if I look at the 45-minute chart, we had an end of trend warning signal a couple of days ago that normally kind of when that coincides with the cyclical turning point on the higher time frame, that signals, oops, I'm looking at the wrong chart, the daily chart, that signals a high probability kind of reversal trade. But we pushed on through that end of trend reversal point, and we're kind of stuck above here. So that would suggest that we're just playing around and potentially break in to another little run to the upside, another kind of little push up to another end of trend warning signal. So this is not kind of working out in order to confirm a cyclical turning point on Monday, for example, let's say. But just bear in mind, if I look at the weekly chart, we are in terms of the weekly chart, we are finding some kind of cyclical turning point in the next couple of weeks, which will be extremely important and signal kind of the end of this last trend that's kind of kept us going since the I think it was March kind of lows in '09. So let me just show you a couple of things, reasons why I'm seeing a pushing up in the market kind of continuing just for a couple of days. This is interest rate chart. Now normally I kind of show the bond chart, but it's just as easy to do your analysis on the interest rates to see where the interest rate kind of turning points are happening. And if I just show you on these three charts, on 3 daily charts and 3 monthly charts, what's going on. This is the 5-year interest rate, and you can see that we kind of broke into a downturn at the beginning of July, and we've now kind of reached a maximum on the downside here, and we've come back to form a cyclical turning point, and this is going to happen in the next couple of days, where this will signal a top in terms of interest rates, and that'll form a pullback in a downtrend and then move on down to an end of trend warning signal. So and that will signal kind of the end of the move, likely in interest rates on this kind of time frame. The same kind of pattern can be seen on the other interest rates. So this is the 5-year contract. This is the 30-year contract, same kind of thing. We're coming back up to a cyclical turning point, having broken into a downtrend here. We're going to find resistance at this point here, but we're still pushing up a little bit in terms of interest rates. They're going to rise, and rising interest rates kind of suggesting that there's kind of a stronger view of kind of economic growth and the equity market kind of continuing on. But I'm looking for the turning point in these interest rates in order to signal when that top is going to be made. So that's the 30-year, and then here's the 10-year. Same kind of pattern here, kind of hooking over to make a cyclical turning point here. It's not going to be a pullback and a downtrend signal here, but it's it's going to be some point where we'll reach some resistance in terms of interest rates, and then the interest rates will move back down again. That'll mean kind of bonds going up and the equity markets going down, but I'm suggesting that this we've got a couple of days to run yet in terms of this interest rate in the bond market, kind of the move down in the bond market. So then when we look at the monthly charts for the same interest rates here, you can see that we've got cyclical turning points happening on these monthly charts, and that those will be coinciding with end of trend warning signals happening in the next week or two on the daily time frame. So here's a cyclical low kind of being formed, and then a similar pattern here, and then the third one cyclical pattern here on the 5-year. So all of these are signaling that on these monthly time frames extremely important turning points are happening in terms of bottoming in interest rates. But we're still going to see a rise for a couple of days here until we get a turning point in these interest rates, and when they turn over, then that means the bond market will kind of take off, and then the equity market will start to dive. So that's why I'm suggesting we've got a couple of days to run on in terms of the interest rates and the bond market. And then you can start to see the markets kind of rolling over the other kind of correlated markets to the equity market. So for example here, this is the copper market, and I've said the copper market tends to be leading the equity market by a few days, and we've had our kind of end of trend warning signal on price here, second cyclical turn after an end of trend warning signal here, had all these bearish divergence signals here coming into this turning point, professional blue bars up at these highs signaling that they're taking profits, and we've started to break below this cyclical turning point here at 340. So this means that we might be breaking into a downtrend on copper. So copper is signaling the market a couple of days early, lately. So that's kind of something we've got to watch out for. The next one I want to show you is the euro. So this is euro contract, and we had a very strange week here. We kind of this last move up in the euro has been extremely weak. We hit kind of a lows of around 126, and then we came up to about 129 here on this last rise. But this last kind of rally was extremely weak. We had our end of trend warning signal, just pushed through it a little bit. All of these bearish divergent signals here with extremely weak buying, all right around the zero line, and we broke into a downtrend here, and we've now broken below cyclical support at this point here, and so that was suggesting that we're breaking into a downtrend on the euro. So those two markets are showing us that there's kind of weakness overall, and they're not supporting a continuing run to the upside in terms of the equity market. Then if we look at crude oil, we kind of pushed up to 76 on Friday, but the amount of buying was extremely weak. We've got bearish divergent signals here. I think ideally what we need to see in this time frame is some kind of pullback and end of trend warning signal. So this is still showing a little bit of strength, but weakening buying at this point. So some kind of pullback and end of trend warning signal to be seen on crude first before that starts to roll over. And then lastly on the bond market. You can see on the bond market we had our exhaustion selling at the beginning of the week here. This is on the Friday of last week. Exhaustion selling at this point here. We've come back down to test these level at 130. You can see that we've got a flush signal here showing that that's kind of exhaustion selling at this point, but not as much selling as we saw on the the exhaustion selling the previous week. So there's some kind of bottoming process in terms of all the sellers having sold at this point in terms of the bond market happening. So you're starting to see some of these markets roll over. The copper market and the euro starting to roll over, and we're starting to see bottoms forming in the bond market and tops forming in the crude market. And then just lastly, let me show you what's happening on the E-mini here. So we had an extremely nice run over the last 10 days or so, where we'd had this flush signal here at a cyclical turning point on the 40,500 tip bar chart, kind of came into test with professional blue bars, stopping volume pattern and bullish divergence kind of close to the zero line here. This is where we took off to the upside here, and you can see these kind of exhaustion buying points at this point here. But now we formed our end of trend warning signal on Friday. All of these professional blue bars up here, very weak buying and so on. We're extremely close here, but I wouldn't be surprised if we saw a little bit. We need to see some kind of exhaustion, a final buying activity that signals the end of this move up in order for us to get a reversal. I'm not convinced that we're just going to roll over it just with a lack of buying at this point. I think we're going to see a little bit of a break to the upside, hit some stops, and then all the sellers kind of get on board and start pushing the market lower. So that's kind of my hypothesis going forward, and just saying in the next couple of days I'm looking for a turning point. If we do get a break to the upside on Monday, if we do get a trend day up, that's a possibility. So I'll be kind of looking for that. And then just this turning point is not quite there yet in terms of my charts looking at this as we see this kind of coming into next week. So going to start back kind of trading next week. Take it really slow and easy. Good luck with your trading next week, and I'll start posting more frequently to the website in the next couple of days.